Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode 243, Protecting Your Assets with Billy Knabe. Billy, thank you for joining us on Upticks today.
Well, you're welcome, Jake, and thank you for inviting me. And Corey, thank you for inviting me. I appreciate it. And you guys do a good job over there, and hopefully I can help contribute with this little podcast here.
Yeah, thank you, Billy. Yeah, it's an important show because, Corey and I work really hard with our team on the financial planning and the investment side. But as many people know, that can all be wiped away if we don't have some sort of protection set up. And that's why we wanted to talk to you today about protecting your assets and making sure that you're properly insured from a property and casualty side. But before we dive into today's show, I want to thank our viewership and our subscribers. Our viewers continue to grow. Our subscriber count continues to grow. So if you're watching this on YouTube, a thumbs up would be greatly appreciated, or subscribing. Also, we're available on Apple, iTunes, and Spotify. Corey, and I know you just got back from vacation. You were out in sunny Arizona. So you want to share with our audience a little bit about your vacation?
Yes, we were out in the Valley of the Sun, Jake, for 4 nights last week. I have a group from high school, actually. There's 5 of us that are all kind of spread out around the country, or at least around the Midwest now. We try to get together once a year, along with our wives. And we were down there for 4 nights, got up and hiked early every day, enjoyed the sunshine, enjoyed the crisp, fresh air. It was great.
I'm going to put you on the spot here. Was there something that you didn't know that you saw, like an animal or an experience, or was there something that kind of was like, wow, I didn't realize that was a thing?
Not really. I knew the town was going to be a little hippy dippy, Jake, but it was even more so that than the way I thought. But we had a blast. We really did have a good time. Didn't actually see as much wildlife as I would have thought.
Oh, you're in the desert.
That's right. That's exactly right.
Gotcha. And Billy, for our audience that doesn't know you, if you don't mind, we'll dive right into it. But do you mind explaining kind of where you grew up, your background, and how you got into the property casualty business?
Certainly. First of all, I just want to tell Corey, thank goodness he didn't run into any crazy rattlesnakes or anything like that out there in the desert and accidentally step on one. So good job.
I have my eyes peeled. Thank you.
So I grew up in Kansas City. I grew up in Raytown specifically, and graduated from Raytown High School. And went to college, played golf in college, and then played professionally for a while in Florida. It was back then in the 80s, we didn't have the Nike tour, and we didn't have, a lot of these other tours. So I just went to Florida and played for a year and came back. And this is leading me to my story, how I got into property and casualty insurance. And so when I came back, I became one of the golf pros at the Country Club of Blue Springs. And I was working out there, loved it, wonderful people out at the Country Club of Blue Springs. And but I was working a lot of hours and not making a whole lot of money. And this went on for about a year and a half. And one of the members there, who I'd gotten to know, and I knew him before even I worked at the country club, was a district manager. And he would ask me about every 3 or 4 months, do you want to get into insurance? Do you want to get into insurance? Do you want to get into insurance? And I kept telling him no, because golf was my life. I wanted to be a golfer, and I wanted to give golf lessons. I loved golf. And so finally, after working all those hours and making not a lot of money, I thought, I'm going to ask Dave. His name was Dave King, wonderful guy, still a good friend of mine. I said, Dave, is that offer still on the table? And he said, well, it sure is. And so that's how my property and casualty insurance career got started. It was a blessing in disguise. I'm very, very glad that I made that decision, and things have been great ever since. We've had, just like every other business, you've got the ups and downs, but it's worked out well, and I'm very happy with my decision.
Awesome. Maybe you can go into a little bit of when you left to start your independent agency and a little bit about that. And then, Corey, I'll let you dive into the next question.
Sure. Yeah, so I left in the spring of 2015 and started my own independent agency at that same time. And so I went from, pretty decent sized agency with nothing as an independent agency and had to build it up. So my wife still jokes that she didn't see me for about 3 years during that time frame, but so well worth it. And I'm very happy I did it. And there's a lot of reasons. We're able to help our clients, I think, because we have more options, rather than just having one place to put our clients. We have several different choices. So it's been a great decision for me.
Yeah, great. Corey, go ahead.
Yeah, Billy. So can you just talk about how many clients do you work with?
So we have, I think we might be right around 6,000 clients. I don't know if we're a little under, a little over 6,000.
Nice. Now
6,000 clients. That's a lot.
That's awesome.
Yeah.
A lot of birthdays to remember, Billy.
Oh my gosh. Yeah, you're telling me.
So you have a team there, right? So maybe you can explain your team a little bit too. How many agents do you have working with you and support? Because I know it's not just you, right? So.
Oh yeah, we have several. There's 13 of us in here now, and and we're all 13 pretty busy. Some of those, it's a mix of, some of them are sales producers, some of them are account managers. We've got quite a blend of staff. We all work pretty well together.
Awesome. And you're located right off 95th and Knoll, kind of in that area, right?
Yep, that's correct. Yeah, I say Knoll, but we're halfway between Knoll and Rowe. But yeah, you're correct. Yep. But it's right on 95th Street. Yeah.
Good. And you mentioned independent. So can you elaborate on that a little bit? Can you explain why someone should go to an independent agent?
Sure. Yeah, as an independent agent, we have options. So when I was, if you're with one company, all you have is that one choice. When you're an independent agent, I can say, hey, Mr. Falcon, let's take a look at your package, and we'll look at several companies to find which one is best for you. And so it's not just a cookie cutter deal. We get a more of a broad picture to find the right fit for our client, because we have so many choices. And the carriers that we deal with are all A-rated or higher, so we don't deal with any B or, God forbid, C-rated carriers. But so they're all highly rated carriers, and they pay claims wonderfully. It's a good situation to be in with an independent agent.
Good. Perfect. Corey, what's your next question?
Yeah, Billy, what are some common mistakes that you see people make when they're dealing with their property and casualty insurance?
Sure. So we'll look at the house side of it for now, the homeowner side. And one mistake I see, and usually we're good at educating our clients and making sure things are correct, but a lot of clients feel like their house should be insured for what the market value of their house is, what it could sell on the market. When really what you want to insure your house for is the estimated reconstruction cost for your house. Not what it's worth, but what it would cost to rebuild it, because that's what insurance is for. And so that's one mistake. Clients come to us and they say, I got a house, I paid $500,000 for it, whatever. And we come back to them and we tell them it's $670,000 is the right amount. And they don't like that, because they're like, that's not accurate. Our house is worth 500. So we have to educate them, and everybody usually understands why we have to do that. So that would be on the house side, one of the items. On the auto side, I see a lot of people underinsuring their liability. So deductibles on your car is not a big deal. If you choose a $500 deductible or a $1,000 deductible, that's not probably going to cause most people to go bankrupt. But a $100,000 liability claim, now we're talking a bigger number, and that's a lot more serious. So I see people underinsuring themselves on the liability portion a lot, and opening themselves up to possible losses with their finances or their investments, where somebody comes in and takes it from. So I would say liability and the cost of their house being underinsured are the two big underinsurance issues.
That's really good, Billy. And what all do you guys insure? Homes, cars, boats? What else do you guys cover?
We cover the cars, we cover the house, we cover the toys, the boats, the jet skis, the ATVs. We can cover jewelry, underneath the homeowners policies. We do a lot of commercial insurance for commercial business insurance. Right now we're insuring my son Connor. He's insuring a lot of apartment buildings and a lot of strip centers. So we do a lot of different things. We don't, we stay out of the health insurance field. We do a little bit of life insurance, not very much. And then of course we don't do the investments. We leave that up to you guys.
Thank you, Billy. Yeah, thank you for that. So talking about someone's property and casualty, I think a lot of people, and I'm guilty of this until you and I talked about it for my stuff, but how often should somebody review their policies? You know, I think a lot of people get it when they buy a house or a car, and then they don't think about it, right? It gets on the back burner. They pay their premium or whatever, but then they don't ever review it. So how often would you recommend someone review their coverage?
Sure. You know, if you Google how often you should review, I think it says every year. I tend to think that's overkill. I think every 2 to 3 years is more accurate, unless you have some life-changing events that, you know, you have a divorce or something happens and you have to change your portfolio. But the normal person doesn't have that many changes. And if they do have a change, say they buy a new vehicle, they let us know immediately. So that's taken care of right then and there. And if they move, we know they've moved because they've given us the new. So there's not a lot of changes that need to be looked at yearly, in my opinion. I think every 2 to 3 years is adequate.
Good. Yeah, thank you for that. And real quick, Corey, I know you have another question, but can you explain umbrella insurance to me a little bit for our viewership?
Sure. So umbrella is it's liability. Once again, I was talking about auto insurance, and a lot of times people will choose minimum liability limits, which would be 25,000 in the state of Kansas. And so that's the liability portion. So that's what somebody would collect from you if you accidentally injured them in a car accident, or if they tripped and fell on your property and injured themselves at your house, whatever, or you accidentally hit them with a golf ball. Believe it or not, it covers off-premises activities as well.
Good thing.
It doesn't cover anything intentional, so don't go hitting anyone and that's not going to be covered. So so the umbrella though is that's why they call it an umbrella, because it covers your house and your cars and your boat and your ATVs and your lake house and your secondary house, whatever you might have. It covers all of that under one liability policy. And you can get the liability in increments of millions. So you can get 1 million, 2 million, 3 million, 4 million. And umbrella insurance, liability insurance, is the cheapest insurance you can buy. So for instance, when you buy your house insurance, let's say hypothetically your annual premium is $2,000. I would have to estimate that of that $2,000, 1,500 to 1,600 of it is covering your house and your contents. Just that little $400 of it's covering the liability. Same with the umbrella. It's very inexpensive, but I feel like it gives you peace of mind, and you can go to bed each night and laying your head on your pillow knowing, heaven forbid, you slide on the ice and accidentally injure somebody seriously, you've got that extra $1 million or $2 million or $3 million coverage.
Thank you, Billy. Yeah. Now, how much is just general? I know it's case by case, but just generally, how much coverage do you recommend someone get their net worth an umbrella policy, or maybe non-IRA, or how much would you recommend somebody get?
I would say their net worth for sure. Yeah.
Gotcha.
Yeah.
Okay.
Yeah.
Good. And again, none of this is advice. I know it's all custom by the client, so we don't want to just give advice on this show, but just generally speaking, I think that makes good sense.
Yeah. And umbrellas are so, like I said, so inexpensive. I hate to say no brainer, but it kind of is. You know, just a standard $1 million umbrella with somebody has a house and 2 cars is maybe $200 or $300 for the whole year.
Right.
For that umbrella. So it's a no brainer if you ask me.
Yeah. Good. Thank you.
Yeah.
Corey, go ahead. Yeah.
So we talked about on the reconstruction, like you mentioned earlier, Billy, on someone's home or somebody's liability coverage. We've talked about being underinsured. How about being overinsured? Can someone be overinsured? What does that look like?
Yes, they can. Not so much on the auto insurance, although I guess you could get too much liability, but I'm pretty conservative on the insurance side, so I would say you can never have too much liability. But on the house side, that's why I said you want to check it every 2 or 3 years, because you could get because the insurance carriers automatically inflate the coverage on the house, because they want to make sure that it's keeping up with inflation and reconstruction numbers. But sometimes those numbers get out of whack, and we just have to readjust and look at the reconstruction cost again and make sure that it's accurate. So to answer your question, I would say more on the house side than the auto side as far as being overinsured. So it's just a good idea to check that every now and then.
Yeah, that is good, Billy. And I just out of curiosity, I mean, do you see more often than not, do you see people underinsured or overinsured?
I would say it depends on how long they've been with the company. So let's say you've been with a company for 5 years, a competition, and they've had that inflationary increase bump on their house insurance, and maybe that has gotten higher than the true cost has gotten. People will come to us and their house is insured by, $100,000 more than it should be. And it's no fault of the insurance company or the insurance agent or the customer. It's just, that's an automatic thing. And that's why you want to check it every now and then. But on the flip side, we do see some people come to us and maybe they told their agent at a prior insurance company, I just want it insured for what I paid for it. And they come to us and they're underinsured. So we see a lot of both, to be honest with you. Yeah.
Good.
That's good. Yeah, it makes good sense. So what about, are there any quick wins you have for your clients, or you'd want people to know just out there, like, hey, this is like you kind of mentioned the no-brainer with the umbrellas, or anything else that you wanted to share as far as a quick win?
Yeah, I would say, first of all, the quick win would be choose an independent agent, because you have choices with an independent agent. And when you've got choices, that usually benefits the consumer. So that would be one big win. Another big win would be you don't want to change insurance very frequently. So in other words, people say, I'm going to shop it every year and go to a different company every year. Well, today with technology, the companies can kind of see where you've been every year, and they can see that you change every year. And when we rate your premium, that's a factor in the rating. So if you jump ship every year or two, it can affect your insurance rate. So I tell people, stay put. It's okay to change every now and then, but you don't want to do it every year. So stay put, review your reconstruction cost. If you need to call your agent and have them review it to make sure it's accurate, do that. But you don't need to jump ship every year, every 2 years, like a lot of people seem to do. Another win, I would say call Jake or Corey if you need any assistance with your finances.
Thank you, Billy.
That's a good win.
That is a good win.
But I think that may be it.
Yeah, I've got a weird one for you, Billy. So I have a client that was looking to go to an independent agent. They're down in Texas, but their current agent would have them go get rock chips in their windshield fixed. I guess the insurance company would pay for it because it was cheaper than, if it got worse and replacing the whole glass. But the weird thing that happened is these technically counted as claims on his policy. So when he went to go switch, the other carriers didn't want him because it looks like he has a ton of claims because he lives in Texas and the rocks kick up and there's a lot of rock chips that he's gotten fixed. So have you ever seen anything like that? Or how would you recommend somebody dodge that from happening? So he's kind of stuck now, right? Because they don't want him to change.
That. Yeah, we do see that. And insurance companies, they seem to look more at frequency of claims versus severity of claims. I mean, They do look at both, but if they see somebody's 5 or 6 or 8 claims in a 2 or 3 year period, that's kind of excessive. And so to answer your question, yes, even small claims, even a rock chip, if you have a lot of them, it could affect you when you go to shop or change insurance. Yes.
So would you suggest then for stuff like that, then perhaps it'd be better for you just to pay out of pocket? That way you're not making all these small claims. Because again, he just thought it was free. And so why wouldn't he, right? Like he didn't know that he was locking himself into his insurance company by doing that. So I guess if it's under your deductible, would you almost always say, hey, just pay for it out of pocket? That way you're not filing a claim?
Yeah. I mean, I think it's okay if you're just going to turn in an occasional rock chip. That isn't going to really affect you greatly. So I would just monitor it yourself. If you haven't had any claims for a long time and you have a rock chip, go ahead and turn it in. It's not going to be the end of the world. But if keep a mental note of your claims and you go, oh my gosh, I've had 3 of these in the last 2 years, maybe I should pay this next one out of pocket. So I think it's okay to turn them in a little bit, but you just don't want to get carried away.
Got it.
Yeah.
Yeah, that's good
And
advice.
we do it's funny, the cost to repair vehicles has really gone crazy compared to what it was 5, 10, 20 years ago. And we used to advise people, hey, get an estimate, and you may just want to pay this out of your pocket. But the cost to repair vehicles has gotten so expensive, nobody wants to do that anymore. So almost every claim gets submitted now.
Got it.
Yeah.
Makes good
Yeah.
sense. Good. Well, is there anything else you wanted to share with us today, Billy, as we wrap up?
I don't think so. I think I've answered every question. I can't think of anything else, but I just want to thank you guys for letting me come on, and I really appreciate this.
Yeah,
It's kind of hard. It's kind of hard to talk insurance with excitement. It's not a very exciting thing, but hopefully we did something.
I could sense the excitement in your voice, Billy. I know this. You've been doing this for how many years now? Have you been in the business?
Oh my gosh, since 1992. Yeah.
Yeah. So clearly you're good at it. Clearly you're passionate about it. And certainly if anyone watching the show wants to get in touch with Billy, certainly email myself or Corey, and we're happy to connect you. Again, we can't officially endorse anyone. I've known Billy for a long time. And again, we really appreciate your advice and your guidance here. And again, I think the biggest takeaway is it just pays to sit down with an independent agent, review your policies every 2 to 3 years, make sure you understand what your coverage is actually covering and that you're not over or underinsured. That's good, Billy. We really appreciate that.
Thank you.
So perfect. Thank you, Corey. Thank you as always. And Billy, hopefully we'll get on the golf course sometime.
Agree. I want to do that. Let's do it.
All right. Sounds good. Thank you very much.
Thanks, Billy.
Thank you.
Good to see
All
you.
right. See you guys.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.